All right, welcome everybody. My name is Benjamin Schaub. I'm a project manager at the Frankfurt School Blockchain Center. As the topic already suggests, we will talk about crypto custody or the custody for digital assets. And for this panel, which we will have about regulated financial organizations, we have great guests here. With me in Frankfurt is Matthias von Hauff from TEN31 Bank, and then online we have Raphael Polansky from Börse Stuttgart representing their custodian BlockKnox, also Simon Seiter from Deutsche Börse, and last but not least Hany Rashwan from 21 Shares. I would say before we start, let's go for a short introduction round. Maybe Matthias, you can start.
Yes, gladly. So thank you very much for having us. My name is Matthias von Hauff. I'm CEO of TEN31 Bank. We are a financial institution that has decided about 2.5 years ago to go all in on crypto. And of course, the main focus for us is the regulatory questions that arise from all that. I'm very excited to be here today, and I'm very curious to hear what other people have to contribute.
Raphael, would you continue, please?
Sure. Hi, my name is Raphael Polansky. I'm from Börse Stuttgart. I'm the managing director of BlockKnox, which is the custodian of Börse Stuttgart, holding the assets of the Bison app and the Stacks exchange. And Börse Stuttgart has heavily invested in blockchain and crypto and token assets in the last 2 years. And I'm looking forward to this discussion and welcome everyone.
Simon, you please.
Sure. So I'm Seiter. I'm head of digital assets at Deutsche Börse Group, and I've been now working for 1 year at Deutsche Börse, previously at Commerce Bank, where I did several use cases within the capital market space and the cash payment area.
Hany, your turn, please.
Hello, Hany Rashwan from 21 Shares. We're the world's largest issuer of crypto exchange-traded products. We have 11 strategies across a number of exchanges and countries, including quite a few ETPs on both Börse Stuttgart and Deutsche Börse.
All right, perfect. So as you already mentioned, your companies have all quite different profiles. So maybe to begin, maybe you can all point out, so what's your current stand when it comes to custody, and what's your current approach when it comes to custody? Maybe Matthias, you start again.
We fall under the grandfathering rule that has been in existence since the latest introduction of crypto custody as a regulated financial service in the beginning of the year. And we have teamed up with Tangany, who are an IT service provider on the custody side from Munich, who are basically providing our backend infrastructure. For us, the primary focus of the crypto custody application for this moment will be to focus on retail applications.
Thank you. Maybe you, Hany?
Yeah, absolutely. We make crypto accessible through stocks, through shares on stock exchanges. And so to us, custody is a very important factor of why people should invest or feel comfortable investing in our solutions. We've thought about it from the very beginning. I would call it a necessary but insufficient condition to launching a compelling product. The top things we look for in custody is first and foremost the technical infrastructure and how it looks and how it operates, what the operations are. And usually that is built on two very core pillars that are very important to us, which is one, that it be regulated custody in some way, shape, or form. And two, in our case, we really are biased towards having some sort of insurance plans that are underwriting this custody solution. And so just to give you an example, we work with 4 different custodians at the current time. And quite a few of them are both regulated by their trust companies that may be regulated by the New York Department of Financial Services, as well as have a corresponding insurance policy underwritten by Lloyd's of London, for example.
Thank you. Maybe Simon, you want to go next?
Sure. So we have investigated the custody market in the beginning of the year quite heavily in terms of technical providers, because we are building solutions rather for the digital security space, which yet has not been the hottest topic, so to say, in terms of digital custody. But I think, and we will discuss that maybe later, that it's an absolute necessity to provide digital securities also to have custody functionality there. And so that's what we are looking into.
Raphael, up to you.
Then I'm the last on this list. So what did we do? Actually, custody started as a necessity for us as well. With the launch of the Bison app, the question was raised, and where do you store it? So we started to do our own custody for cryptocurrencies. We did a quite heavy look through the market for technical solutions, HSM, software solutions, whatsoever. We thought about maybe we outsource it. Instead, we decided we want to understand the technology. We kept it in-house. We think custody will at some point, as in the classical world, become a commodity. But right now, it's key to hold it in your own hands. So we decided to do this internally. We do it for Bison and BSDEX. And we have a kind of a similar view as Deutsche Börse. So we started with cryptocurrencies. But for us, the main or the interesting topic in the future is how do you store and keep the digital assets to come, so digital securities.
Thank you, Raphael, and also for pointing to the next two questions. So the next question would be, as we have already seen and can understand, there are different technical solutions. Yeah. So you were, Matthias, you were talking about Tangany as custodians, which they are going for a hardware approach, HSM-based approach, and there are software approaches out there. So the next question is, from your perspective and expertise, will it make a difference which way you go? If you have a hardware solution or a software solution, does this matter to an investor in the long run? Would you like to start again?
To be honest, I think the only thing an investor cares about in the long run is the question, is it safe? And the second question is it easily regulated? And safety and regulation are the only 2 points I can see. I don't, frankly, care too much what the solution behind that is, as long as I can rely on those two factors. I think one of the main components on the regulatory side is often overlooked. And that is, imagine you have to deal with somebody who sits in an office in Bonn and has to check your papers, BaFin, on what you're doing on the crypto custody side. And they need a documentation they can understand. And we're talking about a hugely complex technical matter. So as an investor, I would look at it and say, can you actually document the stuff that you're doing?
Yeah, but if we talk about the performance and maybe at the costs, will it then maybe matter which solution?
Yeah, sure, of course. Cost is always a factor because any investor will want to see his funds well invested and efficiently invested. But I still hold to it that I would say the two key drivers at this point in time, because I haven't seen many people who consider crypto custody really a revenue driver rather than more as a necessary means of being in the market. Yeah? It's one of those products you just have to offer if you want to be in the space, and it's not so much a revenue driver. So I would still hold to saying, is it safe and is it well regulatable?
All right, thank you. Raphael, what's your take on that?
From the technical side, and I can only speak for our experience, I would always say the HSM or infrastructure or hardware-driven custody is easier explainable to the, and now allow me to say, old world, especially if you're searching for insurance. That is something everybody understands. You have some HSM modules and you have physical security, manual processes, things like that. Always easy to understand. While the software solutions are harder to explain, and there are some points where you need to have a little bit more trust in, but they are most likely to be more usable, especially if you do a lot of liquidity on it, like a lot of smaller transactions. Then software solutions have the edge over HSM modules. But that is just one point of looking at it.
Thank you. Hany, what do you think?
I would have to agree with both Benjamin and Raphael. I think that the end investors care most about the solution working. I don't think they're going to focus on the specifics more than that. is it safe and is it cost effective is ultimately what matters, which is why I think key ways of showing things like safety is showing that it's regulated heavily or that it's insured well. Because clearly if someone from a reputable insurance company like a Lloyd's of London underwrote a policy, then clearly they feel fine about it, that they're giving some of their, putting some of their reputation on the line for that. And also on the other hand, by having and showing regulatory licenses, that also shows that the solution is, at the end of the day, both cost effective and safe, which is ultimately what anyone actually cares about that's investing in this.
Thank you. Now to you, Simon.
I would add something maybe, which out of my perspective is accessibility. Because currently, I think in the market, there are to the largest extent offerings that are like addressed to people who need to onboard somewhere new. It's not really focusing on the large customer base, where somebody would simply like add an asset class to his or her existing accounts. And so I think actually that we haven't implemented yet proper mechanisms in the digital custody space to really offer digital assets to ordinary clients, not clients that are willing to download a new app or create their own wallet or register somewhere or create an account separately, but really to get it into the banking accounts, ultimately, of regular retail clients. And I think this is something that we still have to manage. It's maybe not so easy. It's difficult to develop because in these times, I mean, within the whole crypto space, you can make a lot of plans, but then reality gets you back and things develop differently. But I think this is something we should target for.
Thank you. So, Raphael, you already said it. For you, that crypto custody is a commodity as such. Would everyone here in this panel agree that it is a commodity, and all institutional investors in the future, they will not decide whether a platform is storing their crypto assets like this or like this? So it's just a service. It has to be safe, we already said, and it has to be regulated, but no one will care how it will be done. What do you think?
I would just one addition, and be careful, but here I would state it clearly. I said it will become a commodity because I see it same as Simon. We're not there yet. But sorry to interrupt you. I just wanted to state it correctly.
Not at all. You just took the words out of my mouth. I would have pointed. No, it's fine. It's fine. I would have pointed to the same. Frankly, let me compare to this. If I board a Lufthansa flight, I don't terribly care about the education of the individual pilot. I trust I will be safe. And I think the same goes for crypto custody. People look at the front end face. They say, okay, we're talking to Börse Stuttgart. Okay, I think I'm going to be safe. They're talking to TEN31 Bank. I think I'm going to be safe. If they see a face they don't recognize, like, I'm sorry, don't mean to be derogative, but Azerbaijan Airlines isn't probably going to have the same reputation as Lufthansa. So I really think it goes with the front end that you see. And once you get that point of trust established, then I don't think people will care too much about the back-end infrastructure.
All right, thank you. Hany, you're next.
Yeah, I think that in our experience, it has become less and less of a concern, even with investors we speak about. So we've been in the market for a couple of years. We launched the world's first listed crypto index on the Swiss Stock Exchange at the end of 2018, and that was a novel concept back then. And I would say, got most of the questions at the very beginning of, is this safe? How is it structured? How is it built? How do I feel comfortable investing in this? And over time, we get less and less questions on custody specifically. I think at this point, people feel more comfortable in the structure. People feel more comfortable overall with, as has been alluded to, certainly if the Swiss and German and Austrian regulators, accepted our products, that's adding to the credibility here. My co-founder likes saying that tens of billions of dollars are traded on, a daily basis in oil and grain and other commodities, and no one really cares about the grain silos or the oil storage facilities that actually power these transactions. I think that at some point soon, we will be at that same stage where absolutely no one will care about this, so long as, like I said, specific conditions around regulatory clarity, perhaps insurance, safety, built financial structures, et cetera, are put in place.
Thank you. Would you like to add something, Simon?
Not too much. I highly agree. And maybe just to add, I think the custody itself absolutely will be a commodity. No question, no doubt. The question is, however, if the access, and this is where I pick up the argument of the accessibility, the access management and the layers around it and mechanisms and also like KYC procedures and so on, if these mechanisms around are being commoditized, I don't know. Let's see.
Raphael, would you like to add something?
I think that's a very good point that Simon just said. Accessibility or the ease of use and the services around custody, especially in the AML space, they will become more and more important. Today, yes, the question is, can I trust you? Okay, I see your name. Are you regulated? Are you insured? Are you audited? Maybe somebody even asks which technology you use, but this gets less and less. And the future questions are, how is AML working? How can I plug you into my system? Can I put you in the SAP directly? Do you have an approval where my management can be somewhere on the smartphone and just do things? So it gets more and more, we become a commodity, and with becoming a commodity, the question is interoperability. And this is probably where we're looking at.
I actually think that if I may, as it exists today, we have largely solved the accessibility question for most investors. I mean, anyone right now with a European bank account can easily trade crypto either physically in some cases or synthetically through financial instruments in almost all cases. What we are now getting is more of an educational aspect of where does this fit in my portfolio? How do I think about this or that? Will my specific transfer agent or broker or whoever be able to work with it? Where do they fit it in? Rather than what I think are more fundamental building blocks like custody that I believe have largely been solved already.
Thank you, Hany. So when we take a look in the future, and maybe at the next year, I think it's fair to say that we will probably see here in Germany the first crypto custodians, which will be approved by BaFin. And the question is, I think it will have a positive impact. I think we can agree on that. But the question for me is, what kind of an impact? Will it drive more money into the space? What do you think?
I don't think it's going to make a vast difference, to be honest. I think consumer confidence is built over time, very slowly, step by step. And I believe the fact that BaFin will issue the first crypto custody licenses officially is going to be one of those stepping stones, yes. But I surely don't expect any kind of tremendous wave because of that at all. I look at crypto custody very much as an auxiliary product, a product which is just a necessary means of being able to take crypto into the next step of mass adoption, but not really more than that.
Okay. Raphael, your thoughts on that?
I totally have to agree. I don't think there will be a huge wave of money or liquidity flowing in. I think it's a necessity. Yes, it will be the last or one of the last stones showing trust, especially if BaFin gives out the first 5 or 10 licenses. For the market, I would more assume that we first see a peak of crypto custodians trying to push into the market, which on a later point then consolidates, realizing that the market is not big enough to have 20 crypto custodians for Germany. So you will come back to a smaller scale, or let's say a larger scale, but less crypto custodians. But that will probably not happen 21. It's more 22.
Okay. Simon, what do you think?
I think that we are all much too much aligned. We have to discuss more. But actually, sadly, I have to say, same for me. I think we will reach ultimately a different level of customer acceptance only if we connect to the existing distribution channels in the wealth management, for example, or in the regular customer space. So I think we need this connection between like existing custody world and digital asset custody world, and then we can see more market pickup.
All right, thank you. Hany, maybe you then start with the next question, because I think, if I remember you correctly, Simon, you once said a few weeks ago when it was a panel about MiCA that institutional investors, they will only build the infrastructure if there's one then more asset, namely Bitcoin. So if I understand all of you right, then one could say that the market is the crypto custodians, they are ready from the technical side, and they are, most of them, ready from the regulatory perspective, or are getting ready. So for more adoption, then we will just need more assets. What are your thoughts on that? Raphael?
Well, that's a too easy to answer question, because everybody will now directly say, yes, of course, more assets in that space will, of course, drive the need for more custodian. And yes, right now, I don't know, 65 to 70% is right now Bitcoin. And no institutional clients will not jump on crypto custodian solutions just to hold one asset. As Börse Stuttgart is saying, cryptocurrencies is another asset class, like commodities, like ETFs, which is very good. It's good for the investors, and a lot of investors are asking for it. So yes, we will see 2, 3, 4% of the liquidity going into crypto. But the more interesting thing to come is digital securities. And with this market opening up, there will be, of course, a higher demand for custodians. So asset custodians, I now say. I mean, still it's like crypto custodians, but in this case, digital security custodians.
Thank you. You please go next, Hany. Sorry, I skipped you on this one.
The question on the impact of additional assets being core to bringing more investors into the space. Could you rephrase it just so that I make sure that I'm answering the correct question?
So the question was basically, I mean, all you guys say we are technically ready and we are regulatory ready. So what needs to happen for the space to grow, to have more adoption? And so I just said, do we just need more assets, and will they come maybe next year?
Got it. So we grapple with this internally. Our headquarters are in Switzerland, and from a regulatory perspective, we have a very wide array of things that we can do. We have purposely not released more products for more assets, holding just to the 11 core products that we've released already, with baskets, shorts, and 6 single trackers. I don't know that additional assets beyond, let's say, the top 5, maybe 10, are going to push adoption that much. Most people are still, first and foremost, investing in Bitcoin. Bitcoin has become synonymous as a noun with crypto overall. Whether it's crypto or Bitcoin, to most people around the world, that now means the same thing. And I think that will continue to happen. And so I think we focus on these core assets, which is actually a very good thing, because it allows us to focus on more institutional grade assets and less of uncertain either ICOs or less well-built, potentially cryptocurrencies out there. And we focus 100% on the education. This is what we keep getting more and more and more. We still need to be able to educate people on what this asset class is, how it is different, how it can be compared to previous movements, how it fits within one's portfolio. And I think that's what is going to drive this further.
Thank you. So maybe as a last question for this panel, I would like your opinion on when looking at the next year or maybe the next 2 years, will we see a shakeout in the crypto custodian space? What are your thoughts on that? Because when I observed the space, then I would say last year the topic was mainly dominated by crypto custodian startups. And this year we see more and more financial institutions getting into the space. And as Raphael already said, I think it's fair to say that many of them do not partner with the so-called crypto custodian. They say, okay, we need to understand the technology. We build our own solution. So what are your thoughts when you look at the crypto custodian market for the next 2 years?
Well, there certainly will be a consolidation. I mean, that is definitely to be expected. There are so many companies out there who are offering services in a large variety of ways, but at the end of the day, there's a complete oversupply. That's my personal opinion. I think what is sometimes a bit overlooked is when we go back to the very roots of what crypto custody really is, then there are a host of different applications that we could look at, which are not only to do with Bitcoin as being synonymous for store of value and the like. I mean, at the end of the day, what we're talking about is a highest security database environment, whatever structure the database may be. But what we're providing is an environment in which you can be sure that your data is absolutely safe, be they tokens or be they whatever. And I think some of the crypto custodians might be well advised to look at other applications where they could offer that high security environment to solutions which they haven't even thought of yet. That's my thought.
Okay. Raphael, maybe you next?
Yeah, I can agree. And as I said, there will be a consolidation. Probably we will see way more classical companies going into the market. We will see collaboration between banks and fintechs going into the market or consolidating the market. And at the end, as I said, in 2022 latest, we will see a huge consolidation. Because yes, right now everybody's probing the technology. I think that's a good thing. But there are too much right now. So too many. And that will reduce.
Simon, would you like to add something?
Yeah, sure. So I think it can be very easily stated that the commoditization of crypto custody will lead to also a cleanup in the market, definitely. When we looked at the market in the beginning of the year, we had initially looked at 130 companies that provide crypto custody overall. This is a lot. And in a commoditized market where economies of scale work, it can clearly be the case that there is no space for 130 custody providers. I think what people ultimately do not see is that it's not only about the safekeeping of the keys, but really what I tried to point out before, the access management, and there's also has been pointed out before, also the access to the data, because it protects the integrity of the actions on the ledger. So you have to make sure that the transactions, so it's also transaction management, on the ledger are being correctly put into place because someone is really allowed to do that. And this is the actual key for me of the custody component, not only the safekeeping of keys. Everybody can put a key on a metal plate and put it into a safe and call it crypto custody, but that's not what it is about. And especially if we look at use cases where you need high scalability, I see lots of custody providers fail, because I want to see the provider who is working on an HSM and can solve 40,000, for example, issuances of a security per day.
Thank you, Simon. And maybe, Hany, your opinion on that?
I broadly agree with everyone. I think it's becoming, or has become already, a commodity, so I won't repeat that. The one thing I will say that I'm super excited about actually for the upcoming year, and something we don't talk about often, is more crypto providers and more crypto custodians and other firms utilizing real-world assets in a crypto way. We've already started seeing this with things like stablecoins. We've started seeing it with a few commodities like gold becoming gold stablecoins. And I think there are a lot of benefits that one gets from putting dollars, euros, francs, gold on the blockchain. The most important one of which is yield. And in our world here in Europe, it's obviously a very, very big problem. Custodians and crypto custodians, especially in a regulated and professionally structured sense, can start also custodying stable coins that are built as Ethereum tokens. So they can start custodying actual euros and francs and gold. And I think that is going to be, if done correctly, bring in a lot more investors into the space and be a very good on-ramp there. And I think if we manage to execute on all fronts, including custody, that's going to be a very exciting new development for 2021. Real-world assets in the crypto world.
Thank you, Hany. So unfortunately, our time is already up. Thank you again, Matthias von Hauff from TEN31 Bank, Raphael Polansky from Börse Stuttgart, Seiter from Deutsche Börse, and Hany Rashwan from 21 Shares. Thank you.